Chief Financial Officer, Mr. Ranjani Rathod, the Head of Digital Banking, and Mr. Ajit Shetty, Head of Investor Relations. We'll focus this discussion on the digitization strategy at HDFC Bank. We'll have a presentation by the company and then maybe 10 to 15 minutes for Q&A. Just as a request, please just focus all the questions on the digital and the tech strategy at HDFC Bank, and please do refrain from asking specific questions on the quarterly earnings. With this, I'll hand over to Srini. Srini, over to you, sir.
Okay, thank you. Thank you for getting us here. The way we will start is perhaps I'll give a few minutes overview on various outages as well as the RBI order. Then thereupon a few minutes on the CEO transition, touching upon the strategy, which of course the underpinning for all the strategy is the digital banking, and Anjani will take that into full detail. Then after that, perhaps we'll come back. After that, we'll come back and we will talk about maybe a few ecosystems, the healthcare, the payment, the rural, or whatever, depending on time that permits. And then we'll get to you all for the Q&A. If that's okay, we'll get started. First is on the some pointers, right, as a background. The three outages that people have talked about, starting November 18 once, and then December 19, and then the November 2023 outages, right? They are three different things. They are disparate things. That's something to keep in mind. And then there are some issues I will talk, and then there are some learnings in which we have rectified and some we are in the process. The first one, if you go back to November 18, I want to bring to the attention of people that it had something to do with the application. You know that it was the mobile banking application we implemented, the back-based application that we implemented at that time, that went live. It was one of the most anticipated release because it was revamping the mobile banking and getting into tremendous amount of value addition on features, right? What happened at that time is that there was the old app we removed and we put in the new app. There was a big response, huge response in terms of simultaneous download because people had switched on their auto update feature. So there was a tremendous simultaneous download, and it had some features, additional security features, which was calling for the quick pin access and fingerprinting and giving the debit card, credit card, etc. details in it. So it took a tremendous amount of resources, and the internet banking worked during the time period. So people were redirected to say, go to net banking and do. So the old app users were continuing to work. Those who did not have auto update continued to work. And then it took us 3 days to put the old app back on the system so people could start to download the old app again and then get on. There are several learnings that we had in that process. We rationalized, optimized the technical deployment. As soon as the new app was launched, it was going to look for several APIs and bring them and queue them up in anticipation. So we rationalized many of those. And then also from a deployment point of view, when we redeployed, we started to stagger and redeploy. And those kind of design work were done, and it got mostly behind us from that sense. The second one which talked about was the December one. The December one had, the December 19 one had a hardware matter, right? It was the security layer restrictions, which it is a different reason. The load balancer issues on the security elements, the firewall gate flow through issues where the packets were getting dropped, the logins were getting timed out. It was at a time when the festive offer was also running at the time, right? The many users. Mobile banking at that time was predominantly okay. It was the net banking which was giving trouble. Still, limited users were allowed. This is akin to thinking about a traffic jam situation where a lot of customers coming in and there's a jam, and then some people go through the jam and go through into the system to work, and others were getting stopped at that time, right? There was a staggered people getting in. The buffering and accelerators as proactive measures, we tried to change some of them. Some equipment patches were done, like the Cisco Secure Excel and so on. So we got mostly behind those activities, right? And then comes this November 20, which is the power failure, which is a unique one. Again, it's a different one on the infrastructure. Just for the context to say, there is a data center, primary data center we have in Mumbai. We also have a near data center in Mumbai. There's another data center, we call that the near data center. And then we have a far data center in another part of the country, which essentially provides us the disaster recovery side. So we have these three data centers that are running. But the problem with that particular data center was to do with the generator set. There are two powers, the state power, two power grids supply. One was under scheduled maintenance on that weekend, Saturday. The other one failed. Technically, the generator set will switch on automatically, but the auto switch did not work. But there is a technician attending it. There are 4 buildings, and, and there are 4 generators which had to be switched on. 3 switched on very well. The 4th one, where our building is and the generator that supports that building, the sequencing of the switch on, I think the technician had some difficulty and didn't get it right sequence, and so it didn't get started. So there was, and COVID didn't help too, because we don't want to blame everything on COVID, but it had restricted people and expertise on the ground at that time from a technician point of view. It's an outsourced data center. The facilities management are taken care by third party, and the equipments and applications are of course ours, right? We run that, but the bigger issue there is we have another backup, the UPS that runs for a certain amount of time, even if the generator doesn't work. But then the problem was that once the diesel generator set doesn't come on, the chiller system goes down, and that's not supported on UPS. When the chiller system goes down, so there's no cooling, and the machines get heated up, and that's when it came down, right? There was outage from 6:40 or so in the evening to 8:40 or so. That happened. And again, the management decision at that time was that at some point in time, it's going to soon come back to life with the people coming from outside to get the generator set started, but it took a little longer that weekend for people to come over to do. And we did not switch to the DR center, the far data center, which is the disaster recovery. Because every half an hour you see that it is going to come back, but finally when things started to come back to life, it was 8:40. And there was which is the UPI application, which took 6 hours to come back, right? Which had a little more things to be done on that, and that had to come. So that was the cause of the latest kind of an outage that happened. And the UPA transaction, as you know, per second, 2,000 to 3,000 transactions that happen. At any time, 10 to 15,000 are buffered and ready, because when the transactions come in, it takes few seconds to do various levels of checks. And so at any point in time, about 10, 15,000 is buffered and waiting to get processed. The point at that time was that the recovery point objective, or the recovery time objective, which is how many minutes does it take to switch from this data center to the disaster recovery center. Say it takes 30 minutes, 45 minutes, 1 hour to switch. And then the recovery point, which is at what point do you recover, so that the customers during that particular recovery point gap needs to in considerations. But in hindsight, we shouldn't have bothered about those kind of considerations. And so this is the kind of impact that created, where a couple of hours for various payment and RTGS type of transactions, and 6 hours for UPI, the systems were down. And so what this what happened. Now, in terms of the actions that were taken, we are strengthening the disaster recovery process, application by application testing to ensure the drill goes through well. We are also fine-tuning the near-site data center so that important, which is what we're trying to work on, is the process taken care automatically through a system process. So that is, we're implementing that too. These are more short-term, near-term type of initiatives, and the more medium-term, long-term is looking at the entire architectural efficiency and also in the long-term look at the cloud strategy. Those are the kind of activities that we are looking at. So, what is it the bank is working on in terms of these kind of outages? That's what we're trying to do. From a time frame point of view, the disaster recovery strengthening process, we believe, is 3-4 weeks. We should be done from strengthening and testing and doing the drills, etc. The recovery point and recovery time could be maybe 3 months time that we optimize more on that. The orchestration tool implementation, which we already have the tool, it's a question of just getting that done and tested. Probably we estimate 6 weeks that we will do. And the rest are a little more longer term. Some could take 3-4 months, the architectural efficiencies, and some could take 12 months, the cloud strategy, and so on. That's what we're trying to work on. And what is RBI looking at, right? This is what we are all working on. What will RBI look at finally? We'll look at the disaster recovery that we talked about in terms of both the recovery point and the recovery time and the way that in a manner we will call to ensure that the experts come and audit to ensure that these processes have been looked at and aligned well. Then the detailed work plan will be for the governance of the detailed work plan. We'll go to the board to ensure that the board reviews the governance plan, and there will be a monitoring mechanism to meet all those commitments that we are having. And then once we go through these, which is the next few weeks, we go through, then we'll invite RBI and to come and do the inspection to ensure that whatever we have talked, these kind of action plans, they have all been put in place, right? This gets to the next point in terms of is there a cost addition that is going to, the short answer is no. Our technology spends are quite at the edge of what the industry is or where the market is spending. Which we have told in the past, it is 3% of revenues, mostly in line with the industry standards. Or even if you look at the emerging markets, IT spend standards, IT spend to operating expense standards, we are pretty much in line with that kind of a standard too, right? Then in the short term, what does it impact that we have already announced and we put out, which is there's no new card acquisition. The existing cards are okay. The programs that are running, those are all fine. There's no new business generating digital 2.0. Which we'll talk about. There's nothing that is imminent right now that will bother us, but we'll talk about what is it that we have done so far on those. As I said, there's no impact to existing cards. There's no impact to existing merchant acquisitions. There is no CASA or liability accounts acquisition and process in which the relationship management or the deepening process. There is no impact to the retail or the wholesale loans and the processes that go around it, including various other non-fund based facilities, etc., that we lend to SMEs or the wholesale. None of those get impacted. What we do today, none of that gets impacted, other than those two things that we mentioned about. Right? How do we look at it? We look at it as the way it is explained to us. The bar has been raised to new standards, right? So, as a bank, as a leader in the country on various fronts, the bar has been raised, and we will step up to the new standards on that front, right? These downtimes are not new in India, right, or in emerging to be on the cutting edge, particularly in the context that as a country, we want to double our kind of driving it. And so getting to setting new standards on these are pretty appropriate is what we feel. And such incidents can happen to best of the banks, but then how do we step up and be ready on the cutting edge? That's what we are trying to take it in that manner and go. Particularly in the context that the transaction volumes are increasing and have increased over the recent times, COVID or otherwise. The low ticket sizes UPI, the UPI ticket sizes anywhere from 1,000 rupees to 2,000 rupees on an average, depending on the type of transactions that you see. It still has to support those kind of a low ticket size, but high volume impeccably, right? It has to meet those things. That's where we are thinking of how we approach it and resolve it to get on moving, right? In terms of the culture, right? The culture remains intact. This does not impact the credit process. It does not impact the KYC process. The underwriting criteria has been and continues to be strong. The turnaround time is quite good to provide the customer experience across the products, and we're not competing on rates, right? So from that sense, there is no change in the culture or the approach in which we do business, right? And from a digitization point of view, we continue to have all of those investments continuing. We develop what we have to develop. We test it and be ready. When all of this is cleared up, we go for implementation of anything new, which we'll talk soon about a few things. So that's in terms of the event as such, right? Then getting the recent kind of a thing that you'll be interested to know, the CEO transition that happened on October 26th. Mr. Puri retired and Shashi took over. That has been smooth. As you know, that Shashi has been as a change management, driving the strategic, working with Mr. Puri with a ringside view of everything that is happening over the last couple of years. And there's no change in strategy on that front. He's had various conversations with the clients of various segments, with the employees across various verticals and levels. Those have all been smooth and doing very well from that change of leadership point of view. That's doing fine. The strategies continue, the 5 pillars of strategy that we have talked about, the branch, reimagining the branch channel, the VRM strategy, the semi-urban and rural, the payment strategy, and the digital strategy, which underpins all of that, right? Which is what we're going to focus a little more and talk about those things. All of those strategies go very well hand in hand and do well. In terms of the digital, which I want to touch upon, Digital 1.0 is already done, implemented, as you know, I think 2014 or 15, after the visit to the Silicon Valley, where a lot of knowledge gathered about how fintech players are very important on the cutting edge and the angle for doing various finance transactions, and how we as a bank disrupt ourselves to be on the edge of banking, on the edge on all of these things. So that is how we embarked on several things. For example, the 10-second loans that we have is still unparalleled in the market or anywhere for that matter. We continue to lead, which is already implemented, part of 1.0, digital 1.0, and that is great. The loan against the mutual funds or the loan against shares, which is instantly that happens. Again, one of the first in the market, and that's fine. The API-based integration, the host-to-host integration with various corporates, or the SME digital processing, including providing, let's call it the trade automation, the FX automation, all of that, where sitting at their offices, the SME or the wholesale banking customers can do various things sitting in their office, don't need to visit any branch to get things done, right? The insurance advisory process, or the EVA chatbot, or the PayZap and the Smart Hub, those are all part of the 1.0, pretty much live and getting on. And you know that the analytics platform, which is underpinned through the data warehouse. Again, we were one of the pioneers from 2000. We've been having 20 years of data in our data warehouse. The analytics platform and the AI that runs some of the applications on that, those are all part of 1.0 doing fine. There's nothing changes in 2.0 as we come along to those, right? And as we defined the customer journeys around these 8 things, which is the pay, save, invest, borrow, shop, trade, insure, etc. There are several stages at which things get implemented, and to the extent in 2.0, certain things that Anjani is going to talk about. In 2.0, as the year unfolded, we also implemented CSC, as you know, is again networked digitally with a lead being provided, or if it's a business facilitator, or if it's a business correspondence, again digitally enabled and working on. As the COVID came and hit, we got in this Insta account opening, which is we already had the digital account opening process, but then that process had certain handoffs coming through, which we have said that we tried to stitch it in a couple of weeks after the COVID hit to see how things go straight through. And we opened up this Insta account opening, where 1.2 million accounts we opened in Q1, April to June quarter, and 1.8 million accounts we opened, the liability accounts we opened between July to September. And the context for that is that we had 6.5 million accounts all of last year, which is FY20, 6.5 million was the total liability accounts. And the year before, we had about 3.5 million. So we almost doubled. And right now, with the COVID process going through, we still kept up with the digital 2.0 changes that we did in terms of Insta account opening, as well as the video KYC that went hand in hand to do that, right? Then several APIs got implemented, including the My Apps for the societies, the clubs, or those kind of organizations. And the Smart Hub in terms of the payment process. At some point in time today, we talk about how the payment strategy in terms of the payment ecosystem, what happens with that. We can talk about that too. Maybe with that, Anjani, if you give a overview of Digital 2.0, then I can come back and talk about a few other ecosystems. Thank you.
Thank you, Srini. On Digital 2.0, one of the most fundamental lens that we are using now is the customer lens to ensure that whatever products and services we are bringing out is much more intuitive and contextual from customers' perspective. Now, let me give an example of what we mean by this. We used to acquire liabilities account, CASA account earlier as well using technology, but a lot of it was origination, and some parts of the backend processes would be dropped on the floor, and that would be processed manually or through manual interventions. When we took up this entire process, we looked at it from customer's perspective, how customer will discover this capability, how customer is going to get onboarded on her own. And we redesigned the entire journey to ensure that a new savings account customer is able to come onto our site or click on a link on mobile and is able to get onboarded on her own. And by doing this, we ensured that the journey was so intuitive that people would not need any help or assistance from anybody to go through that journey. This we did it with one of the journeys, which was opening of a savings account, and it yielded very good results. As a result of this particular one journey transformation, we have now undertaken a program to look at all the revenue earning journeys of the bank. And one by one, we are making each of these journeys very different so that it is more focused from customer's perspective. Essentially, I just want to share one framework how digitization gets done across a banking infrastructure so that we all can stay focused on that. There is a core of a bank, which includes core banking systems, credit card systems, loan management systems. It also has some of the other core capabilities like CRM and all. That's considered the core of a bank. And in the core of the bank, the main job is to ensure that this is always on and it performs at scale. Through these core systems, we are bringing out various APIs, and these APIs are exposing data and function points. And once this data and function is exposed to the outside world, we are putting various engagement capabilities on the top. These could be various apps, it could be forms which are applicable and runs on the internet. And these engagement forms are actually the ones that a customer gets to see. So imagine a new Insta loan journey where bank is offering unsecured loans to customer. Customer is able to discover where this is able to provide details, provides access to underwriting capabilities that comes through salary slips, or it comes through giving access to bank account. Underwriting is done on the fly, and with that, the customer is approved. The loan is approved for the customer, and even disbursal made if the customer is adding the bank account. So this entire journey then becomes seamless, and over a period of 8-9 minutes, a customer is able to take loan directly from the bank without talking to anybody. Now, this is what we are doing with several of our journeys, and that's essentially the basis of Digital 2.0. Each of these is consuming, but a lot of this is already working in different forms. Each of these journeys are today working. A lot of it is working properly for existing to bank customers, but when it comes to new to bank customers, it requires a little bit more complications to solve before being done on the engagement layer. Now, engagement layer is also of two kinds. One, where a customer comes to the bank. So customer could be coming to the bank at the bank branch, to various net banking, mobile banking sites, or any of the bank forms. So these forms and APIs are getting exposed to those layers. And APIs are also getting exposed to our partner sites, which could be an e-commerce site or any of the large consumer internet sites where customers go, where customer has actually gone to do something else. Customer is trying to buy a refrigerator, buy an air conditioner, and we are available through APIs to ensure that when customer needs us, and we are able to offer lending support. So buy now, pay later, or convert your shopping into an EMI. These kind of capabilities are being enabled across various partner sites and merchant sites to make it happen. This is where we have been embarking on a journey. We have automated. There is a huge amount of thrust on each of these journeys becoming intuitive and contextual. On top of that, there is also a whole data engineering lake which is getting created, which will allow us to understand and draw insights on the customer behavior, so that we are able to personalize many of these offerings for people who are visiting our sites or touching us through any of these digital touch points. This is on digitizing the customer experience for the bank. Apart from this, there is also another method in which we have been working on Digital 2.0, which is essentially creating a completely cloud native capability, microservices enabled capability, which would allow us to issue new products to customers. And these would be 100% in the cloud. They have very little dependence on any of the traditional systems, apart from the ones which is required through regulatory means. And we are able to offer products and services to our customers. PayZapp is a very good example of a product like this, which was launched a few years ago. We have learned a lot in terms of how a cloud native application scales up and is able to provide some experience to a customer which is unparalleled. So we have been working on that line cloud native stack coming to play. On top of this, we are also working on ecosystems, which would include, automobile ecosystem or healthcare ecosystem, where present at those locations to offer support to the customer as and when the purchase is happening. So imagine a place where customer goes, browses through a catalog of vehicles available, makes a choice on the vehicle, and then it transforms into a loan journey where a customer chooses, simulates what kind of EMI a customer is expected to pay, what is the interest rate, the payment period. You are able to play with that. And at the end of it, if you are satisfied, you can make the purchase of that vehicle using the lending support that comes from the bank. So these are the three ways. One, where customers come to our digital properties, we are able to offer much improved customer experience. The other is when the customer is going to our partner sites, where we can offer our experience of lending and opening accounts for the customer on the fly using APIs. And the third one is the ecosystem creation, which we are actively pursuing in some of the sectors to ensure that we are able to link all these things together and have today in the country. So this is our entire plan going forward.
Thank you, Anjani. With that, maybe ecosystem. We can start with the healthcare ecosystem. Some of the elements of that are already implemented, so it is a little more what we have talked in the past as we signed up with Apollo and so on and so forth. In the healthcare ecosystem, the context here is that we have various relationships across customer segments. For example, if you look at the corporate banking relationships, we have a relationship with various pharmaceuticals. In the SME segment, we have various relationships with, call it the stockists, the distributors, and some of them are chemists and so on. We also have relationship with the hospitals and the nursing homes, either in the wholesale banking in some segment or the other. Then we also have relationship with the end customer, right? 60 million of them we have relationships. Now, we started with this Apollo partnership, where Apollo has got a Healthy First initiative, which provides several features, 24/7 access to doctors, and the kind of a diet advice or a physical exercise or testing or priority in consultations and priority in various other hospital services, right? And Apollo has got, say, call it about 300 lakhs or so customers who have registered with them at some point in time in the past several years historically, right? Active is about 30 lakhs who are active. That means the feet on hospital coming in at any point in time in a year, say it's about 30 lakhs or so who are active. And so the point here is that through their process, trying to see how we network with those kind of potential customers, if they are not already our customers, how we will bring them to be our customers, provide them the banking relationship on the liability side or on the asset side in some form or the other. Apollo also has got doctors, 20 to 30,000. Some are permanent and some are visiting doctors, 20 to 30,000 of them. Again, the endeavor is to see how, to the extent some of those doctors are not existing customers, how do we have a relationship with them on either side of the balance sheet, right? So that's something. Then Apollo also has got about 3,500 pharmas, the chemists. To the extent that some of them aren't already signed up for our payment, and how do we get them to book? So that's another opportunity that we are embarking and working on. And another thing that we have said is, as part of various other programs that we run, is also the employee relationships, right? In various corporates, like the way we have. In the case of Apollo, as an example, they have 65,000 employees. In terms of how they pay accounts and the processes that go, again, on both sides of the balance sheet, what do you offer? So that's as one example I'm saying in terms of the ecosystem. Our objective is across all of these, starting from hospitals to pharma companies, and stockists and distributors, to chemists, in between the doctors who are there to ultimate consumers. Across all of these ecosystems, how do we be present to help a transaction from one to another, to get a value-added services between one of the anybody in this chain, and how we are in the middle in terms of getting the banking done. Right? And as part of that, think about another relationship that we have is the Practo. Practo has got about 10 million patients and a few lakh doctors, in 2 lakh doctors or something registered there. And we are working with Practo to see how we get into the middle of that, to bring the relationship between those people who are touching Practo in some form or the other. The Plexus MD is another knowledge-based organization like the WebMD in the Western world, the Plexus MD, where there are about 1.4 lakh doctors and 70,000 students who are there, who are sharing knowledges, and how do we tap into those kind of relationships for them to be top of the mind, and we are in the top of the mind to be forming relationship. There's another, Medall is another organization which stitches together the stockists and the distributors, and they have about 7,000 of them in the country who are already registered there. Right? And so tied up with Medall to see how we get those kind of a transfer of relationship in some form or the other, how we become the center of the plate for them in terms of working. And Apollo is only one of the examples of hospitals, right? We have relationship with several other hospitals in the country, and our goal is to ensure that such relationships are built across all the other hospitals and nursing homes, so that we stitch the whole thing together from a customer point of view. Let it be from payment to banking to assets, to their supply chain process. Across all of those, how do we get on? So that is part of what we call the healthcare ecosystem, because the entire healthcare industry, we believe, is growing at the rate of 15 to 18% or so and is expected to be about 27,000 billion industry by 2025, growing at a very, very hectic pace. When you compare to how the GDP is growing, is a few multiples of GDP. That's what this healthcare is growing, and so that is what we are trying to tap into. So just I want to give a context of that healthcare and the elements of these. If you think about what is this healthcare ecosystem stitching together, we have products and we have systems that are supporting various initiatives, various segments that I touched upon. All we are trying to do is how do we be the center of plate? How do we play that critical role in each one of those in the ecosystem, so that we are able to bring all of them together? So that's something on the healthcare ecosystem. On the next I want to talk about a few minutes is also on the rural, which has got a tremendous amount of digital initiatives going in the rural, starting with about the CSC. We have about 1 lakh VLEs that we are signed up as business facilitators. And as you would imagine, the CSCs, as we have said in the past, the CSCs is a division or the outfit of the Ministry of Information and Technology, highly digitized, doing digital services to on behalf of Government of India to various citizens. And now we tied upon with them to ensure that digitally the leads are transferred to us. And in order to support the closure, we have about 53% of our distribution centers, the branches are also in semi-urban and rural. And 1/3 approximately of our people are also there, from the agri sales people, the SLI sales and service people, and the branch people. 35,000 or so people are already in semi-urban and rural, supporting various things. Now, instead of a single product or a monoline kind of a vertical approach, all of them have been turned over the last year, 2 years to be holistic banking type of product and service type of people. And so they are able to deliver everything from all the products that is required on the ground. And in order to support that, we are also signed up with, which we said last quarter end, about 12,000 these kind of a CSCs are signed up as business correspondents. Again, that's a phenomenal, and we have, as we have announced, we have goals to go further in terms of signing up the business correspondents, so that our presence, they can do certain things that the branches can do. That is the reason for signing up some of the CSCs as business correspondents. And they are all digitized in terms of how they operate and transmit information and work through with us. So from that sense, that's a CSC. And then the CSC is also fully working with the new outfit within the CSC. As we talked last time, the quarter call is about the e-Gramin, the CSC e-Gramin. The e-Gramin store is, we have those VLEs running e-Gramin, and we are tied up with them for enabling their digital collection facility through the smart hub that we have. So that we are in the center of the plate for those e-Gramin activities, which whatever the customer calls the e-Gramin store to supply or purchase, they do. How they are using the smart hub facility to do the payment collection kind of activity, and how our involvement with these kind of VLEs with engagement, we are able to provide sooner some kind of a lending facility also for the purchases that happen through the e-Gramin store. So we are networked with that too. The CSCs bring in salary accounts leads, again as part of various initiatives. As you know, in semi-urban and rural, there are a lot of hospitals, a lot of education institutions and government servants. And as part of the process is for the CSCs to bring these kind of salary accounts and bring it to the bank for us to fulfill and get it completed. And same with the farmers and the mandis, right? There are several semi-urban and rural. The activity is a lot to do with the agricultural activity. The farmers and mandis are there, where the accounts are getting signed up. And last time we said 1.5 lakh accounts or so, farmer accounts, have been sourced through this kind of network. The other big one is also the Gram Panchayat and the ecosystem that goes around that. As you know, in the semi-urban and rural, the government has got several activities that go around this, government services to the local population through various Gram Panchayat organizations. Again, last quarter, I think we talked about how about 6,000 accounts or so were opened of these Gram Panchayats so that their nodal accounts and their distribution accounts, as the government services come in, we are networked. So that's in terms of how we are trying to bring together the semi-urban and rural, supplementing our own branches through this CSC and ecosystem around the CSC that I tried to describe. how we stitch them together and bring in. That's something to keep in mind on the semi-urban and rural. On the payment ecosystem, particularly touching upon the merchants, right? We have 2 million merchants, and which we told in the last quarter call too. And then we have a process in various media. We talked about how we want to take it to 20 million merchants or so. How do we go? And the country, as you know, has got 55 million. We have 55 million merchants across the country. That's an estimate. Only there is a 10% penetration. So the market is growing a lot in terms of digitizing some of these merchants into accepting digital mode of payments. We've been at it for some time. Last year, we ran the festive treat, signing up with 100 such partnerships online and physical. Right. This time around, we signed up with 1,000 odd kind of partnerships who provide discounts or retail brands provide discounts or cashbacks or rewards or both in store and offline through the e-commerce platform they provide, and we network with all of them to get things moving for our customers. So providing some value, stitching on one hand the consumer, on the other hand our relationship with all of these kind of big players. So that's something that we did, and in order to expand this further, particularly into the semi-urban and rural too, we also had about 3,000 odd hyper-local merchant and traders making offers, making customized deals at the regional level, local level. So in addition to the 1,000 partnership, this time around 3,000 odd at a hyper-local level. That means merchant, and around the merchant, all the consumers, they are all made these offers. That's something that this time around we networked, and in order to help these kind of merchants too, we implemented the Smart Hub, already done with several merchants. And what the Smart Hub does is that it is it is agnostic to whether the merchant will operate through a physical POS or a mobile POS or a QR code or any such, or simply on an e-commerce through a computer process in terms of accepting payments and doing all of that. So it provides that kind of a value add service. It also helps the merchant in terms of managing inventory, supply chain management, and also making local offers. They can distribute the local offers to their neighborhood, and also including sending product catalog and QR codes for them to make it easy to make the purchases. So that's in terms of the payment ecosystem that came through with that. Now, maybe with that, we have only a few minutes, so I'm going to stop here and then get back to Saurabh and the team to see if we have anything more that we should address.
Thank you, Srini. I think you've covered a lot in your presentation, and I'm sure there will be questions around that. So we'll just take questions for Srini and Anjani now. If anybody has a question, please do raise hand on your Zoom app, and we'll be happy to queue you in. So I think we can wait for about a minute. But to start off, sir, if I can come back to your ecosystem strategy and essentially on the healthcare part, which you've outlined. Clearly, the opportunity is very big, and we've had one of two of the other non-bank players getting into it. Do you think there is room for about 2 or 3 players to coexist, or do you think the Apollo partnership is good enough, and I mean, you may not need to look beyond that one single player?
No. Apollo is, as I said, is only a beginning, right? We have relationship with several hospitals in the country. And we are in the process with all of them, and this is not a one-off or a one hospital, one network type of exercise. You can think about all the big ones, the Max or the Narayana Health. Think about any kind of. I gave you a couple of examples of just anecdotal names, but all of the hospitals, wherever we have relationship and where we don't have, we will have relationships, and that's where we are trying to get the whole ecosystem stitched together and work on.
Okay, so this is actually it's a big differentiator for our customers, because they will get access to healthcare on a preferential basis, and also for those customers who are reaching out to these various hospitals, if they need any kind of a lending support, it is available from us. So it's a win-win proposition, and Apollo is just the beginning. It could go to any number of healthcare providers.
Okay. Thank you, sir.
I'll probably just take one more from my side. So, sir, on your merchants part, so obviously there is a very big 10x kind of growth which you're looking on your merchants part. On the merchant strategy, how do you balance a trade-off between the MDR, the fee which you may have to potentially let go of, versus the account balances or the liability balances that you hope to build? So do we have a trade-off in terms of, you have lower fees for some time before the balances build up, or do you think both these two things can happen concurrently so as to not put pressure on the overall profitability as you build out this merchant business?
Sort of on the merchant process, the payment business, essentially the merchant business for just a simple swipe type of transaction, we've always said is not profitable. It's not a new thing. We've always said it doesn't. If you do that on a standalone basis, does not make full value, right? The way a merchant sign up happens is you start a relationship, which is a banking relationship. You're able to see visible cash flow through the payment process. Then you have a lending relationship based on the cash flow based whatever you see. Right? So it is then you supplement that to their personal accounts and their family accounts, and then from their ecosystem, right, the supply chain of them. And that is how we are approaching it, and that is how it makes business sense to be holistic in that process. And for the merchant, what is it here for the merchant to be working with us? And for the merchant, that is why some of those value-added services in terms of the hyperlocal offers, and they're enabling through technology for them in terms of their inventory management and their supply chain reordering, and sending their catalogs with QR codes to their hyperlocal, so that they're also there's no such big kind of a procedure or a process they need to follow to get these things, and they can instantly get out and do. That's what this smart hub and all the process is intended to do.
So that's a fundamental lever for making this entire 10x scale. That the whole process becomes so simple that what used to take a long time to acquire one merchant becomes much more simpler, and it's largely on an unassisted basis, where anybody having a retail outlet across the country is able to get onboarded on a self-care basis and get full assistance from the bank in any of the products or services.
Okay, got it, sir. I have a few coming over on email to me. So effectively, sir, this is, I'm just clubbing 3 or 4 questions which have come together on your digitization strategy. Effectively, you have guided for a cost income reduction of almost 500 basis points over 5 years, and we've seen a part of that come through. How do you, is there a case that given whatever has happened with the Reserve Bank, the tech spends could need to go up, and hence that kind of, puts pressure on that cost income guidance?
See, the tech spend, we believe, is quite robust. And the issues that we described, as we said, I don't think it's more tech related, more process that along with the tech enablement that needs to happen. And there is always a technology initiatives that run in the bank all the time. We are having a big tech investments, and that will continue. And one of the important criteria to get the cost to income to whatever we said in the past, to get to mid-30s, one of the big enablement is also digitization, in the sense that that entailed some investments, and which we always said there is no linear way of getting from 39 to 35. Some quarter, some years, it could be a little more beneficial. Some places where we are making investments, it will be less. But then the commitment from that sense stands. And from a technology investment, there is nothing new that is required, but it is already part of our plan in terms of how either we refurbish, we upgrade, or we bring in new technologies. We are continuing to work even now on all of these kind of technologies, and we continue to spend on those. And okay, I also quoted in the beginning of the call in terms of we are quite on the edge in terms of our spend levels and so on, right? So not that there is something.
Yeah. So we have a next one from Yash at Genesis. Yash, you want to go ahead?
Hi, Srini and Anjani. Thank you so much for a good presentation. I just have a question for understanding the whole merchant ecosystem. So, when we are scaling up from, 0.5 million to 2 million to the next 20 million, are we the sole current account holder there? Or how are we sort of making sure that, we are sort of the sole banking relationship and we see all the cash flows? Because I'm assuming a lot of the UPI, QR based companies are already in some of these merchant stores. So if you can just help us understand the lay of the land.
So, Yash, actually, in the market, you're right. Merchants are being acquired by large aggregators. These could be technology aggregators like even Paytm or Google Pay and Amazon are also working on acquiring some of the offline merchants. So that's one channel where the digital acquisition is happening through aggregators. If we participate in that kind of an ecosystem, then we are not the only ones. Because then it's a shared ecosystem, and a large part of the transactions may go through others as well. But there is also our own dedicated channel. We have Feet on Street today, which is in the market acquiring merchants who, as Srini mentioned, that they'll be opening current account with us. We get access to their payment transactions on a daily basis, and we know exactly what is happening over there. If we provide lending support, payment settlement, etc., that is dedicated to us. And then there are also some of the technology service providers who've been in the market for long, like Pine Labs and others, who have a steady rate of growth. Over there, some of them are dedicated for with us, and their partnership is exclusive with us, but in some cases it is shared. So the answer is that it's actually a mix where we are focusing dedicatedly, then we get everything at our end. But in some cases, it's also shared. So we don't have the full access in some cases.
Right. So, if I just to understand this further, so given that, a lot of these tech players have been more aggressive or have been earlier than us in acquiring these merchants, aren't these merchants which we are now trying to acquire already digitally active, already have a current account, saving account, and would be harder to sort of switch to our ecosystem?
Actually, it's not. In fact, when we go into the market, we see that a lot of these acquisitions that have happened so far is largely on the acceptance side, where the
Right.
merchant is actually accepting digital payments from customers who are walking in. So if they have cash, the guy accepts cash. If they have a digital money of any kind, they are accepting. But merchant has got a lot more requirements. Opening of an account, which maybe gives you instant settlement, offers you lending if you become a merchant with us for a period of 6 months, and we have access to cash flow data. Then your working capital, access to loans at certain points of time becomes very easy. It's a full bouquet. Today, what is happening in the market is just one part, largely on the acceptance side. But when we go in with a full bouquet. That's where we are seeing good traction in the market, where some of the guys who are already working with others also, they are open to flipping with us.
Great. Thank you. Thank you so much. This is very exciting. All the best.
Thank you.
Thank you.
I think, Sid, you want to go ahead, please?
Yeah, Srini, Anjani, thanks. Siddharth from JP Morgan. I guess related question, you've already answered part of it, but a related question would be, we obviously sit within the banking ecosystem and a regulated ecosystem at that. Some of our competitors obviously sit outside the banking ecosystem. Just in terms of product offering, are there any inherent advantages that they have on digital product offerings being outside the banking ecosystem, which let's say we don't? I know you've addressed, the acceptance versus, the ancillary product advantage that we have sitting within banking, but just trying to understand if any of our competitors outside the banking ecosystem have a native advantage that we don't today. Thanks.
So Siddharth, we really don't see any specific advantage being outside the financial ecosystem. In fact, if anything, we are able to create some capabilities being inside the bank, which is far more attractive for the merchant. So we are not really seeing anything very specific which we are not able to offer to our merchants, which being outside, you are able to do that. We haven't seen anything. Just in case if you hear or see anything, please do let us know. But overall, if there is a pressure on DR as well, I think we are most equipped to take that pressure much better. And even if, since we are on the issuing side and acquiring side and acceptance, all sides, it is much easier for us to handle that from our perspective. So which the non-financial services players not be able to do that very easily.
Thank you.
I think we're out of time, sir. We have one last question coming over email. So, sir, just on that VRM strategy, wherein you had outlined that the next 7 million should contribute as much as the top 3 million. Where are you on that journey right now, sir? And what is the earning contribution of the next 7 million right now?
So on the VRM side or the virtual banking side, I just want to lay down the 3 building blocks that we are working on. One is, of course, the VRM, where our strategy is to offer relationship banking to a set of customers who we believe are ready and where the customer has accepted to be a part of this VRM ecosystem. So we have a set of private bankers who reach out to these customers on a regular basis. And these private bankers become the first port of call for our customers, whether it is for service or for sales related needs. This is the person who's the go-to person for these customers. So this is one piece where we had 6 million customers. During these times, we have not really scaled up significantly from 6 million. But what we have done is there are some customers who have moved out slowly, and we have replaced it by another set of customers who are much more willing to be connected through virtual ecosystem. There are some customers who are not comfortable on the digital connect, and there we have replaced some of the customers and got some new ones. So overall number would not seem much higher, but our portfolio quality and our ability to serve these set of customers have gone up. So that's one which is there. Second piece which we are also doing is our ability to serve the customers through VRM channel has gone up. See, today, traditionally, banks offer service to customers through phone banking, where when a call comes in, a phone banker is able to solve the customer's problem. But in this case, if the customer happens to be a VRM customer, then we have now got the ability to connect that customer directly to the VRMs as well. And even during COVID times, whether the VRM is at home or working from office, the productivity is almost at par, whether you are at home or you are in office. So we've been able to get it to that level. The third thing that we are doing now on VRM side is that so far, largely our ability to connect a customer to an agent in VRM was largely based on their liabilities relationship. We are now extending it to assets and cards relationship also. So there may be customers who don't have liabilities relationship with us, but they may have taken an auto loan or have home loan or they have a credit card where they are spending significantly. So they are, of course, good quality customers. We are reaching out even to them to enroll for this program. So we are seeing good traction here as well, which is going to allow us to serve some of our high quality customers through this specific capability which is there.
All right. Thank you. Thank you, Srini, and thank you, Anjani, for reminding us why HDFC Bank continues to be a leader in technology. And we do hope, and we certainly at JP Morgan do believe that if some of these initiatives that you've outlined come through, you'll actually open up a moat, which will likely not be replicable by a lot of banks in the country. So thank you, everyone. Thank you for joining this session. Thank you, Srini, and thank you, Anjani, for giving us this time.
Thank you, Srini. Really appreciate your being here.
Yeah.